Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The SGX Nifty is indicating a bit of a gap up. Should you be buying into that? Ashwani Gujral Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwani, you were talking about it yesterday as well, that maybe the correction is behind us, and you won't be surprised to see this market at new highs. But a 35-point gap up, how should one trade that?
Well, good morning. Given that we've had a couple of days of narrow ranges, I think today we'll open above, I think, yesterday's high. So that way it would be worthwhile chasing today. So both on Nifty as well as Bank Nifty at the open, you should be buying. And probably by end of the day, you should have fairly decent closing. On Nifty, we expect 10,405, 410. And on the Bank Nifty, we could even get up to 25,930 to 950, which is couple of days back high.
That's a century on the Nifty and a double century on Nifty Bank, Ashwani, today itself?
That is the Nifty Futures and the Bank Nifty Futures targets. But you shouldn't be surprised if you get a century, because the market is in a fairly decent mood.
Okay. Well, Sudarshan, good morning to you. You would be as bullish?
Yeah, good morning. Yes, Latha, this is a right time to be in the markets on the long side. Hello?
Yeah,
please go ahead. Yeah, now we can.
Okay, all right. This is the right time to be in the market on the long side, and it's very important that traders should be positioned as buyers and not try to time or identify any kind of a silly top. This market, my sense is that the Nifty is likely to make lifetime new highs, and that's good news. The banks have already done it, and the Nifty is probably going to follow that. So if you are still not a buyer, we should have bought on Friday, on Monday. There were good opportunities. This gap up is again a buying opportunity. Go long in both the futures, Nifty as well as Nifty Bank. So this is a very easy trade to take.
Okay, so two of our experts agree that it's long all the way, with some impressive price targets in mind as well. Mitesh, good morning. How are you approaching things? Is it a straight buy for you as well today?
Yeah, I think very much. Yesterday also we had been on the buying side on the indices. I think 10,250 was a good support. We didn't test that and kind of reversed and closed stronger. And the mid-cap action was suggesting a good break to the upside. I think that with this gap up, we should be able to get past the 10,350 mark and then head towards 10,420, 480 over the next few days. So I would be trading clearly more on the long side on the indices. On stock-specific basis, also more on the long side. But yeah, we'll trade with some short calls as well.
Okay. Well, with that bullish template in place, let's discuss specific stocks. Ashwani, what are your stock favorites?
See, Jet Airways continues to move higher. That's a buy with a stop of 710, target of 745. BF Utilities is a buy with a stop of 500, target of 525. DV's Lab is a buy with a stop of 1030, target of 1080. JSPL is a buy with a stop of 170, target of 184. And Edelweiss is a buy with a stop of 295, target of 312.
Okay, 5 mid-cap from 5 different sectors for Ashwani. That's interesting. Sudarshan, what about you? You also have DVs on your list, but other stocks as well?
Well, DVs is part of the pharma sector. I've been explaining how pharma is bottoming out and beginning a new bull market. So the best opportunities are going to keep on coming here in this one, in this sector. DVs is a buy. Also, Bajaj Auto has been in a trading range for almost a month after a big rally. That trading range should get resolved on the upside, which means another big rally could be in the offing. So you really want to buy this stock and hold it for some time, not just a swing trade. Tata Chemicals had a big day yesterday. It's a breakout from a small flag. That tells us significantly higher levels are coming. Again, a positional trade is justified here. V-Guard is breaking out of a small trading range. This is a momentum stock. Take a swing trade. Don't overstay your welcome. But the trade is there. Petro, which is having a fairly large distribution. Something is going on there. But that could be considered as a short also.
Okay, so that is Sudarshan's list. Mitesh, I'm seeing that you're looking at selling Reddy's, is it? Yesterday, a lot of pressure because of competition from Cipla in a key drug. That's one of the short calls for the day?
Yes. So I have two short calls. I think one of them from the cement sector, which clearly was negative in a strong market yesterday, and Reddy's is the other one. The first call is on ACC, where we've seen some negative crossovers on the indicators, some intraday sell signals. So sell with a stop at 1734, look for declines to about 1650 level. And the second one, as you rightly highlighted, is a sell call on Dr. Reddy's, which has broken key supports of 2305. So keeping a stop just above that, 2308 is what I recommend. Look for declines to about levels of 2200. Three buy calls, Biocon being the first one. That's a buy with a stop at 412. Look for targets of 445. I also have a buy on South Indian Bank, where the intraday charts are getting very strong now. So buy with a stop below 3070. Look for targets of 33. And Tata Chemicals is showing some continuation signals of the up move. So that's a buy. Keep a stop at 718.5 and look for 780 as the short-term target.
All right, gentlemen, thank you very much for those initial trading strategies, but we have lots of questions for you. The global screens are telling us that there could be a lot of rejoicing for the bulls in Indian markets. That says JIX Nifty, promising to start almost close to the 10,350 mark, which is halfway to, well, it's a futures index, halfway to what Ashwani is saying. So the early morning start itself is expected to be a gap up. And the Indian markets could do a little bit of a jig better because of the NBFC stocks. But what are the commodities telling us? Manisha Gupta is joining in. Manisha, crude bears on the prowl today?
Well, they are, yes, and we are just less than a week away from the November OPEC Vienna meeting, and the markets are looking at the fact that Russia perhaps may want to delay the extension of output cuts, and that wouldn't augur so well for the prices. So yes, we are off highs, nearly 3% off from where we were trading in sense of a 2015 high in the previous week there. But it also has to do with the strength in US dollar. Well, the political turmoil in Germany and also the strong US economic data has supported the US dollar prices. It's trading nearly 0.5% higher versus the euro and pretty much the same versus other major economic currencies, and that has led to some bit of a sell-off in many of these commodities. The gold prices, which inched up to a one-month highs yesterday, have not been able to hold there, but this pace as well has been holding, especially on the backdrop of US actually considering further sanctions on North Korea. If that story develops further, you might see some safe haven buying come in for this sector as well. But the sector which has seen a turnaround in the New York session yesterday has been the metal space. You have the iron ore prices trading at a two-month highs. The China property prices have surged yet again in the previous month. And even as the US dollar has been on the stronger side, it really is about the deficit which has been widening month on month for metals like nickel, zinc and lead, which took all of these metals up nearly by 2% in the overnight markets. And Shanghai as well has opened firm.
Okay, Manisha, thanks a lot for that. Ashwani, I know you have JSPL on your list, but I wanted thoughts on stocks like Tata Steel, Vedanta, Hindalco, the big ones. Do you get a sense that the rally is resuming here?
Well, they've recently corrected below their 50-day moving averages and are now turning back. I won't be surprised if you get a 10% rally on all of these metal stocks, because bull markets don't really end in this fashion, and chances are that you'll see a huge flourish before the final top is made. So this is a good time to get into the both Tata Steel, Vedanta and all kinds of other metal stocks.
Okay. Well, we'll keep coming back to you, Ashwani, with more such doubts. But Prakash Dewan of Altamont Capital Management has also joined us now. Good morning, Prakash. Well, first up, I just wanted to ask you whether you picked up anything positive from M&M. They're starting this factory in Michigan. And Anand Mahindra, we'll keep playing that interview with Ron repeatedly. But basically, he's saying that they've got some orders from the US Postal Service. And, of course, that they're looking for new SUV model launches.
Yeah, so that's more relevant for us because
the SUV launches.
Yeah, because he cited an example of the XUV 500 and how people made a beeline for it.
Yeah, but after that we had to see another such
that's the challenge. And in the environment that we saw the US start off with the Donald Trump administration talking about making everything locally. This was something that they would have to do. You can't be exporting vehicles anymore to the US in that. So that's a huge space that's getting vacated by a lot of other players who don't have local presence. So that way, it's a tactical move which might pay off in the long run. But in the short run, I don't see any huge upsides, Latha, from this. But I think they haven't. He hasn't mentioned anything about launches of petrol variants in India itself. But given the environmental concerns, that is a big challenge for them. And then they don't yet have. They're not even close to that because SsangYong doesn't have any petrol technology which is
straight away jump to EV. He talks a lot about EV instead of petrol.
No, but EV is got to go through an acceptance curve which is very long. You know, I mean, just not the technology, but it's more of consumer acceptance.
And it's a shame, Scorpio, for example, is not in petrol. It would have been my car if that was the case. But Prakash, good morning. The other interesting aspect, of course, we broke this news first, and now it's official. Logistics to get infrastructure status. Your thoughts?
Anuj, I think we have a guest waiting by, and that's the stock of the morning. So, Prakash, just a minute. Quest Corp, the company announced the big new acquisition, has brought a 51% stake in Tata Business Support Systems for 153 crore. Ajit Isaac, Chairman and Managing Director and CEO of Quest Corp, joins us on the phone line. Mr. Isaac, good morning. Thanks much. Well, just wanted to know what is the purpose of this acquisition, and will you be able to release major synergies?
Well, for the first point, Quest has wanted to be in the customer lifecycle management space for a long while, and we were looking to be invested in this. We're happy to have found a good target with TBSS. It's a marquee name, and we think it's a good investment to make in this space. There are synergies because we are selling phones, we're selling refrigerators, we're selling consumer goods, and we think to be able to service them in the future is going to be a natural synergy.
Okay. Sir, what are, I believe the revenues for FY17 for TBSS were around 660 odd crores. They enjoy better margins than Quest, I think, at the blended level. What is the revenue growth rate this company has exhibited, and how much do you think it will do in the current year, for instance?
So it's a company with a revenue growth potential of about 20% per annum.
Okay. Can you scale this up further, the Tata Business Process Company?
Yeah, I think we can.
Okay.
I think we can.
No, if you could develop it further, what kind of scalability do you see? What kind of revenue growth? What kind of volume growth you see in that business?
Quest historically has been growing by about 20% per annum, and we think we should be able to average the same number with TBSS.
Okay. Mr. Isaac, good morning. So, what's the long-term plan? You stay with 51%, or is there provision to buy out completely as we move along?
Well, as partners, we are both committed to growing the company. So if it needs more capital, we're happy to put in more money into the company.
Yeah, because right now you're buying 51%, so that's controlling stake. I'm talking, in a sense, I was looking at how the numbers will be consolidated as we move along. So, and if this company has higher margins than yours, so in that case, is there an understanding that you will have the right to acquire the balance as well?
So we have a progression path to, to consolidating the company in the books of Quest, but that's a decision that we will take as we move along in consultation with the Tata Group.
Mm-hmm. So, Mr. Isaac, question on Quest overall. I mean, your organic growth and the way that's playing out. What is the run rate you're hoping to do on the organic side? And is this going to be the only acquisition you look at for the interim, or will you, keep the door open for, let's say, the next 12 months as well, in case you get more such opportunities?
So we have a principle of additionality. We look at new assets in a space that we are not present in, or in a geography that we are not currently operating in. So if we were to get assets that meet with some of our investment criteria, we're happy to look at them. Assets that are run by good management teams, have a long-term commitment to growth, and that fit in with our culture at Quest. So we're happy to keep committing more capital. We're very excited by this acquisition of TBSS. We think there's a lot of potential in growing this side of a business which Quest has never had before. Last year we had about 220 crores of EBITDA. we have added another 55 crores with Quest. With TBSS, which means we've added almost 25% more EBITDA. So, size-wise, it's a significant acquisition for us.
Oh yeah, that means you're done for the year if that is your rate of growth. What do you suspect? You would be able to do 20% or even more?
I think we can do more.
Okay, and what is that more? What is a realistic number?
So organically, we are looking to grow our businesses between 15 and 20% and layer, acquisitions on top of that. Okay. So historically, we've had a, CAGR of in excess of 40%. And on a larger basis, of course, more difficult to sustain that. But I think we are in a good place with the acquisition that we've done with TBSS.
Is it all internal accruals?
This is entirely funded through internal. It's an all-cash deal. It's funded entirely by internal accruals.
Okay. You did do that QIP in August, I think, where you raised about 1150 crores, sir. So I'm assuming that this acquisition would have been paid through by that kitty and
through equity and through cash of the company.
Okay. You said that you will be interested in new geographies as well as in new verticals. What other verticals may you be interested in?
For example, in the facilities management space, we operate in hard services, soft services, security services, etc. We're not present in the landscaping space. Okay. And that's a huge part of the contract that comes with large facilities. So that's an incremental area that we'd like to be invested in. We are not right now present in, the service facilities for phones that's sold. We sell a large part of Samsung's phones in India and for other manufacturers. So we like to see how we can extend our engagement with the customer, right from selling a phone to servicing a phone. So these are the type of incremental areas that we like to get into.
All right, Mr. Isaac, we'll leave it there. Thanks a lot.
And that will also be very useful, I must say, Mr. Isaac, if there can be more service centers.
In fact, to see the chart of the stock, it had a big run after its IPO doubled, and after that it's been consolidating from June. In fact, it's been a 6 or 7 month period where the stock's not done anything. Prakash, thoughts on this? And then, of course, we'll ask about logistics as well. But Quest Corp?
Oh, so I think this is, I don't know, you got them probably to speak on that new acquisition. And they've been making a lot of acquisitions. But the stock has also suddenly found a lot of favor because of two factors, Anuj, recently. One is there's another company in the SME side which has got a huge response, got listed yesterday, called ANI Services. 5,000 crores chasing a 25-30 crore IPO. Of course, the level of specialization and complexity are very different for ANI. I'm not comparing the two. But this space is getting so promising because companies, when they expand and they're not too sure of the visibility of growth, they would first go to staffing services and employment this thing. And by the way, last year they were one of the largest employers in the country. Every 5 minutes they recruited one person.
Quest Corp.
Yes. So it's already seen proof of concept.
Between TeamLease and Quest Corp in that case?
Yes. So TeamLease is, if you see valuations, TeamLease probably gets a little bit of a richer valuation because it's more focused with just a few verticals. Quest Corp has a lot of smaller parts that add to it. And then now today there's a brokerage that has come up with a very smart target on Quest Corp also. So you'll probably have the right reasons for it to be in the news.
Okay, let's move on to the next. Actually, before we get our next guest in, the question that Anuj asked you about logistics.
Yeah, so, very interestingly, they've defined what out of logistics what's going to favor. And let's look at what is it that's capital intensive in the logistics sector. And it's usually the equipment. It's a high cost construction equipment which people tend to refrain from buying because it's very high cost. Now, if you're saying the cost gets slightly lower, which is 50 basis points and more if you're doing ECBs and all, it is going to be some of these large companies, and most of them are MNCs like Komatsu, Hitachi, Hyundai, JCB, who are going to benefit. The two companies that are in that space, one is ACE, which is Action Construction Equipment, and the other is BEML. I think if you focus on these two, they will definitely be able to, and it's a huge market, equipment towards infrastructure and construction, which logistics companies will also have to use, especially when you talk about warehousing, roads construction, railways. So, last year it was about 20,000 crores as a market. It's expected to grow 50% in the next 3 years. So there's enough for everybody. I would watch out for ACE because recently there's been some activity by the promoters. They've been buying out from the open market as well. So I mean, after a long time, there's visibility on this sector. And if that's any kind of an indication of comfort, probably, you know, this is the right time.
Okay. Well, real estate stocks are also on our radar. Of late, they have been buzzing. And so we thought we'd get some expert opinion on this as well. Adidev Chattopadhyay of ICICI Securities joins us on the phone line. Adidev, generally for the sector itself, what do you recognize? Is there a tailwind and will you buy into this rally?
Yeah, good morning. Yeah, so as you've seen, the commercial segment of the market has seen a smart recovery of obviously the last 3-4 years. Rentals have gone up by 50% over the last 4 years. Office vacancies have fallen. And also the excess supply which is there in the market has been shunted out. And obviously you've seen large global institutional money chasing these assets. So obviously that is a space which has done well over the last 3-4 years and that continues to do well. At the same time, yes, the residential market has seen a prolonged slowdown with a high inventory levels, prices also remaining static, and buyers not coming forward to, buy fresh apartments. However, now obviously with the demonetization being behind us and also the RERA and GST implementation also being rolled out in the last quarter, finally we are seeing some green shoots. Now developers are now focusing more on affordable housing projects, mid-income housing, and are also tailoring their offerings and discounts to largely in the projects which are nearing completion, rather than just focusing on keep on launching new projects.
Okay, so you're identifying two spaces, one commercial and the other affordable housing. Which of the listed stocks can be best played for the commercial rent space?
Yeah, so obviously again then we prefer to remain selective. So few players, obviously Bangalore-based guys like Prestige and Brigade, which have a large annuity asset portfolio along with mid-income housing presence. Obviously, those are the top picks. Then you also have a Phoenix Mills, which obviously is the only standalone mall developer in the country, having very good assets. And of course, the other one, which would say the dark horse, which is DLF, which is again has been grappling with problems over the last 3 years. However, the recent deal being signed with GIC Singapore, we see a significant deleveraging story over there, and we expect the company to do far better in the next 2-3 years compared to what has happened in the last 3-4 years. So those are the 4 stocks mainly in the commercial segment where you see good traction coming in. On the residential space, we prefer developers who have low debt, obviously. Topics remain among them being Oberoi Realty, Godrej Properties, and Pune-based guy, Kolte Patil Developers.
Okay, well, DLF has been telling us that January onwards, they're expecting their sales to improve. Let's see, we're getting close to Jan. Adidev, you did name Oberoi, one of the prime developers as far as Mumbai goes. Now, they don't have an affordable housing play. I mean, they are in that higher ticket premium bracket where, I mean, I don't know, are sales really picking up? What's the rationale behind Oberoi beyond the fact that it's a slightly more deleveraged play?
Yeah. See, Oberoi is again with RERA coming in, right? RERA implementation and the way approvals are not easy to get by in Bombay, execution is a challenge. Obviously, Oberoi Realty stands mainly for its branding strength. See, in the Resi space, Oberoi Realty, obviously it is obviously as you said, it is not an affordable housing as such, it is more in a premium segment. But again there, the branding is pretty strong. If you look at other players like Godrej Properties, even and when they launch their premium projects, they have seen pretty good traction in the sales. So a lot of it is also driven by branding. So even in the premium segment, obviously it's not a widespread, bull run over there, but few developers because of their branding are still able to garner a certain pace of sales, and the low debt levels help them to not get too worried even if sales are sluggish for a few quarters.
Okay, so affordable housing, you said Kolte Patil. Who else is in affordable housing?
There are some few other players also in the space who are doing good work, in the listed space rather, in like Ashiana Housing, we have Arihant Superstructures, Poddar Developers. So there are a host of players in that
You
space.
don't recommend them?
We currently do not have ratings on any.
Okay, very simple, quick last question, Adidev, from my side. These stocks have already seen a huge rally. Many of the stocks that we've discussed right now. Are the triggers that we're discussing, are they enough impetus for another bigger up move? And also, I mean, there's a foreign brokerage that's put out a note saying that the cost of land is falling, which means the cost of the raw material itself is going down, should work well for the numbers for most of the developers. Just wanted to get your thoughts on that, whether you agree.
Yeah, so I would agree with that view. See, again, it boils down that when we are discussing listed space, it boils down to around maybe 10 to 12 developers across India. Now, with RERA and all coming in, obviously, the smaller developers over a period of time would get shunted out of the market. Obviously, current valuations factor in just what is on the table, like what land bank these companies have currently. However, what is not being factored in is that they have the potential to add more land parcels, mainly in joint ventures with many smaller developers or with land becoming cheaper. And also developers who have these commercial and the rent yielding assets, the value of these go up over time as the rental income stream keeps on increasing. So obviously, yes, all the sectors in a good rally. But again, if you take a longer view, maybe over a 3 to 4 year period, there are still enough triggers again, but being selective in these 10 to 12 names.
Okay, Aditya, thanks a lot for your time today. That's real estate. Ashwani, that was your big call at the start of the year. You know, stocks like Sobha, Prestige, Kolte Patil. What next for these stocks? Do you think these stocks are in a multi-year bull market?
See, given the hammering they've had for the last 5-7 years, I think now they are in a clear markup phase, and most of them can easily still double from here because as a sector gets more transparent and as there are regulators, etc., like with what happened with the stock markets, chances are real estate will invite more and more investment. From being an untouchable, I think lots of people will increase exposure to real estate.